Welcome back, guys. Welcome back. This is the next lesson, the next video that I actually wanted to see you on. This is lesson number 6. So, on lesson number 6, we are exploring this interesting tool that we have on the charts. This would be the Fibonacci tool. So, Fibonacci, in my perspective, would be the best tool that you could ever use on the markets, and this is a tool that I have been using for quite some time now, and I have gotten to trust the tool and actually see how it works. So I'm going to select like a very clean chart for you to see what it is that I mean. So Fibonacci, just to maybe explain, right? So the market would give you an impulse, correction, impulse, correction, impulse. So the Fibonacci tool helps us to identify these impulsive levels and also give us the next targeted area. So Fibonacci would give us an entry from here to there, right? So Fibonacci would give us direct entries from this leg all the way to that leg. So we are trading. So whenever the market is on an upward trend, we're obviously looking at buying. And the tool would help us understand where to buy and where to exit. Because most of the time traders do see the trend and they can see that the market is going up, but they do not know where to enter. And even so, they would know where to exit. So this tool will help us get to understand where to enter and where to exit. All right, so I'll be doing like a couple of examples for you to actually understand this tool. So from this area over here, the market would give you this low and then push up. The minute you spot an exhaustion, it's going to dip into one of the Fibonacci zones, which I'm going to discuss with you in a minute. Dip into these zones. From there, then the market would push up. So it either comes to this zone, that zone before it pushes up, or even that zone before it pushes up. So we will be exploring these zones. Before I actually go onto the tool itself, I want to actually point out a couple of things, right? So this point over here, we'll say that this is point A. Sorry about that. We'll say that this is point A. And then on the point A, we'll say that this is point B. Then from point B, we'll say that this is point C to point D. So this is what I mean in essence. So we'll have A to B, and then we'll have C to D, which is the leg we're trading, and we will have B to C. So this B to C leg will be a leg that we will be monitoring on an upward trend for that C to D leg whenever we are trading. So I need to mark this out. So this will be your A, this will be your B, this will be your C, and then that will be your D. Do note that we are trading the C to D leg whenever the market is trending up, right? So whenever the market is trending down, you would have the same scenario. So this is what you would have: A, B, C, and D. We are always looking at trading the C to the D leg for now, until we're actually masters of what we are doing, so much that we can trade the C to the D leg, sorry, the B to the C leg. Because as of now, we don't want to add a lot of confusion. We want you guys to actually understand things slowly and grasp everything as we go. So we will be trading the C to the D leg, not the B to the C leg. I will explain what I mean by that now. So for now, I will ask that you take a screenshot of these levels. So I'm going to ask that you look at my screen right now, take a screen grab from the top trend line. You don't mark that out, you actually unmark that, and then you've got all these levels on the screen. Please do take a screenshot. If I'm moving too fast, you can actually rewind and actually get these levels properly. And on the background, make sure it's at 0, because a lot of people will have it like that, which is what I don't want to see on the charts. It will be like that. No, I want to see what's happening on the background. So make sure that the background is actually very clear. I think even unmarking that whole thing is actually better. Let me see. Let me just see quickly. Let me see. Okay, yeah, even unmarking it is better, but I'd really like you to have it at 0. Make sure that you mark out prices so that you can see what price that is. Mark out levels. Make sure it's on percentages and not on values. From there, make sure that the labels are on the right and also in the middle. Then you make sure that the fib levels based on log scale are unmarked. We don't want to see that. And then make sure that everything else looks exactly like mine. Do make sure that it looks exactly like mine. I don't want to see any different thing from what I have on the screen, right? So this would be the Fibonacci tool settings that we use at Genesis World Club. This is the only thing that I want to see right now. Make sure that you don't have anything different from what I have on the screen right now. So from now on, moving forward, we will be discussing how we can actually get to explore this tool and how we can get to actually start winning from this tool. All right. So from now, click OK, delete everything. And then from there, I will be explaining. So on an upward trend, the tool would work if you mark it from previous swing low to previous swing high, and whatever pullback will rest on one of these four levels, either the 38.2, the 50%, the 61.8, or the 78.6. It can even go to that 100% retracement, giving you a double bottom pattern before it actually goes up. Now, here's the trick. On your targets, you always use negative 27 as your first target and negative 61 as your second target. So that is your second target, right? So the market can either come to that negative 27 mark or come to that negative 61.8 level. So you must always know that. I will be going to the charts. It is as simple as that. Make sure that you understand it the same way I'm explaining it. There is no difficult method. There is no difficult explanation. It is just as simple as that, right? So it helps you measure out the pullbacks. As you can see, the name of the tool is Fibonacci retracement. It helps you measure out the retracement before it actually moves up. So let's measure out this move, that whole A to B leg. So this would be our A leg, because then look at how I'm actually drawing this. A leg on the lowest point that we have on the charts, and then we have our B leg on the highest level, and then this whole push before this pullback happened, this whole push to the upside would have helped us find entries over here. Remember that everything is in confluence, right? So that level will be from the wick to the wick, and you can see how we came to dip into the 38.2, right? From the 38.2 we went straight to that negative 27 target. So the first target would have been hit right over there. So if you came in here, you would have known that the market would have pushed up to the upside to that negative 27%. This is simple, pure basics, guys, pure basics. With more practice, you'll be able to understand this tool, the beauty of this tool, and what you can actually use. So even here, right, let's maybe take up, let me see, this A to B extension, A to B leg, sorry. So that's A, that is the A, B over here. So that's A, B. Look at how that C extension was at that negative 61. So negative 61 for the C to the D leg. So you would have gotten entries over here to that negative 27. So negative 27 would have been your target. This was a clean move. This was a clean move from, so this would have been your A. So let me just mark it out so that you can see. This would have been your A. This would have been your B right at the tip of the wicks. This would have been your C right at that negative 61.8. And this would have been your D at that negative 27 as your first target. Look at how much you would have gotten on this move. This move would have been phenomenal. You would have gotten a whole 750 points, basically. 750 points is equivalent to 7,580 pips. So this would have been a beautiful move to the upside. So again, I'm going to keep on doing this until you actually understand it. So on an upward trend, you drag it from the bottom going up. On a downward trend, you drag it from the top going down. So I'm going to be looking at downward moves. So let me just go to this market over here. So if you were measuring this whole move, so let's take this leg and that leg. So we've got our A there, we've got our B right at the tip of the wick, and you can see how we got a fake above that 50%. 50% to that 60% level, that box over there would have ideally been a level for entries. Look at how, if I drag this to the right, you can see how we actually came and hit that negative 27 to the T. To the T. So if you came in there, you would have gotten that entry to negative 27. Beautiful, beautiful, beautiful move that you would have gotten with this Fibonacci strategy. So this method is 100%, if not, and 90% or so, because I've seen it not working like once or twice, but most of the time this move will literally be a move that you can easily catch. So let's look at this A level and that B level. That's the whole push to the upside before you got that pullback. So that's A. So I want you to see how I draw it, right? So from the tip of the wick to the tip of that high wick, look at how we came to that negative, that 38.2, sorry. So 38.2 would have been our ideal entry. Target would have been at negative 27. Negative 27 literally got hit around there. So it kept on ranging and ranging and ranging. From there, they pushed out of that range, heading straight to that negative 27 mark. So this would have played out absolutely to the T. So this again proves itself to be a very accurate tool that you can use even on currency. So I'm going to go to gold. Let's see how this would have worked out. So on gold, we have got that whole push to the upside, that pullback. Let's see. So if you measure that low, so it's that low from the lowest point to the highest point over there. So we did get a pullback to 38.2 rejection before we actually rallied to the upside. Negative 27 hasn't gotten hit, so this setup hasn't fully formed. You can see that we can actually get a push to negative 27, which is around 1800, which has always been my target. So for the guys who follow me on Instagram, on my IG, I did give out a target of 1800 from this level. I did say that I'm actually bullish to 1800. This is how I got the move. A, B, C to D leg 1800 would have been an anticipated level of projections. And also you can then come onto the charts, look at how you would have gotten the entries properly. From there, you would have had a trend line from there on that level. First and second week, I will do a trend line tutorial video after this one, and you can see how you would have gotten the entries to the upside to that negative 27 level, which would have been an 1800. So this proves itself once again to be a tool that works on Nasdaq as well. So Nasdaq, I did say that Nasdaq was going to get to 9500. If you're wondering how I knew that it was going to get to 95, from this level, point A, point B, pull back into 50%. 50% went up to negative 27, 95, 68. Played out to the absolute T. Look at that. Point A, point B, point C, sorry. Do you have our point C there? Point C and point D. So we would have traded that C to D leg, but with experience, you can actually even trade that B to C leg, waiting to see what level do you have. Also using confluence, previous resistance level, now used as new support level. Also, now this becomes a level of interest because we do have Fibonacci right there. My goodness, Fibonacci right there. From the left hand side, we have a resistance level right there. So resistance there, support there, and this becomes support. So there's a whole list of confluences that we have that we can actually start using to basically understand what we can do to basically get trades, even on smaller time frame moves. So this is clearly an upward trend, right? So this is clearly an upward trend. So this is how you would have actually like gotten entries going up. So I did draw like a trend line there, cut trend line, and we got like a clean breakout and a retest before actually rallied to the upside. Even on this market, You've got this level over there, which has been respected throughout. You can see previous high respected throughout. Probably you can even draw it there to maybe get like a bit of accuracy using these wicks at the left, on the left hand side, actually looking at this and that as well. Now trying to understand that, okay, the market actually did come to the support and left off that support level. We actually haven't gotten to that high. That high would be an anticipated level of targets to the upside. So when you go to a smaller time frame, you can actually start using, look at this, right? From this push alone, look at this. Beautiful, beautiful, beautiful move. Look at that. Point A, point B, point A, sorry, point B, point C at that 38 level. We did get a clean reversal at that 38. And then look at how we literally hit the target. So if you came in round about here, you would have gotten your targets at that negative 27 to the absolute T, guys. This is again crazy and insane, all right? So now suppose that this move is to the upside, this one that we have, you would have drawn point A, point B, right at the tip of the wick. Look at how that negative 61.8 is holding. Look at how that negative 61.8 is holding, right? So not negative actually, that 61.8 level holding strongly. From here, we can anticipate that the market can push up to that negative 27, right? So this can be a possible scenario on NAS 100 as well, if we look at it from a different perspective. So this is how you would use the tool to basically get like proper directional bias, get proper anticipated levels of pullbacks and everything else. So I hope you guys actually got to learn how this tool works. On a downward move, you would have obviously drawn it from the previous swing high, so the top of the wick to the lowest wick. Look at how we basically rejected at that 50%. From 50% went straight to negative 27, even took out negative 61 before we actually went to the upside. So this is how you can get entries and exits. So entries and exits using the Fibonacci tool. I will see you guys on the next video. I hope you guys are actually watching and following. I can't wait to see you on the next video.